Hello everyone, my name is Khan and welcome to the new video. In this video, I'm going to teach you exactly that how we can take entry after taking out the investment and mitigate your order flow. When press tap on order flow, then we are looking for the buy and sell using lower time frame entry module. Once press tap on order flow, people get confused that how we can take entry using lower time frame entry module. So in this video, I'm going to teach you exact process step by step. In a bullish market, in a bearish market, generally market taken out the investment, then market push downside and upside and mitigate your order flow. Then we switch in a lower time frame to see exactly what happened in a lower time frame. If everything is a fit as per our criteria, so simply what we can do. In that case, simply we can apply for the buy and sell. Let me show you exactly how we can take entry in a higher time frame and lower time frame entry model as well as. Let's see. Okay, so this is our Euro USD chart in a 15-minute time frame, or we can see here that market momentum is showing bearish and continue pushing downside, creating lower lows is here. When market momentum is a bearish, and suddenly what we are expecting here, we are expecting that if market momentum is a bearish, market should be taken out the investment, then we can plan for the reversal in a downside. And same thing applicable here. We can see as per the current structure here, we can see how many times market create lower lows is here, right here, and this is lower lows, lower high, again market create lower lows. And what we are expecting here, we are expecting again here we can see a downside move right here. But which one we can expect a downside move? Market should be taken out the investment, then we can plan here for the sell. But where is the investment? That's important thing is here. If market momentum is a bearish, the first pullback is here after break the structure here. It means the momentum is a bearish and continue market pushing downside. Market should be taken out the investment. So where is the investment? This is our pullback is here. We can mark this one as a investment. Market should be taken out this one, and then we can plan for the sell if market create any opportunity after taking out the investment. And let's see what happens next after this one and how we can take here. Market trying to go higher and higher, and finally market taking out the investment is here. So now the next question is here that if market taken out the investment, what will be the next step here? The next step is here, in a same time frame, market should be break the previous recent low is here. In terms of the structure here, we can see here if market break the previous recent low is here, then we can plan here for the sell. Market should be break it and close below it. So we can see what happens next after this one. Price close below it. After close below it, we need to wait for it to mitigate the order flow. Where is the order flow? Order flow means the in a bearish market, the last buying momentum before the sell, which one is here. It means this is our order flow. Price should be mitigate this one, then we can switch here in a lower time frame. This is our 15-minute time frame, and we can shift here 1 minute, 2 minute, even 5-minute time frame as well as here, because we are following here structure based entry module, not the candlestick based theory. In a previous videos, I told you that if we are using 4-hour time frame candlestick, and we can jump into 1 minute time frame, even 2-minute time frame directly, because in this case we are going to switch in a 15-minute time frame to 5-minute time frame, which is looks very larger. But reality is here that in a 4-hour time frame candlestick will gives you very aggressive momentum. That's why you need to use 1 minute candlestick. But in a structure base, it take a lot of time to create the structure, mitigation, and then market push higher and lower as per your plan. So it take a lot of time technically. So once price mitigate here, we need to wait for it to switch in a lower time frame, then we can plan for the next buy and sell setup. Let's see what happens next after this one. And this is our mitigation. Mean this candle mitigate here, and now we can turn into 5-minute time frame, even 2-minute time frame, even 1-minute time frame as well as here. Once price mitigate the order flow in a higher time frame, then you have to wait for it in lower time frame direction. And also, if you are looking here for the buy and sell, price should be taken out the investment in a same time frame. Like for example, if you are looking here for the entry in a 2-minute and 1-minute, even 5-minute time frame, then you have to wait for it to taken out the investment in a same time frame, in a lower time frame. Then we can take entry, and you will get a very good entry here. Let's see what happens next after this one. If market taken out the investment and then market push downside, so we can take entry here for the sell. In this case, market trying to push downside, and at this point we can see here what happened next here. Market taken out the investment. It means once market taken out the investment, and after this, what are you looking here? Order flow, and turn into lower time frame order flow refinement. For example, this is our higher time frame order flow is here. Okay, so if there is any unmitigated order flow is here, this one is here, which is mitigated by this one, and this one is also mitigated by this one. It means all order flow is mitigated here. There is no unmitigated order flow available here. So if there is no unmitigated order flow available, that means you have to wait for it to taken out the investment, create one more order flow in a same time frame, so we can take entry here. So this is our higher time frame investment taken out. After taking out the higher time frame investment, market push downside, mitigate in a same higher time frame. Once that mitigate this one, then you have to wait for it in a lower time frame. Lower time frame we can use 5-minute, 2-minute, even 1-minute time frame. In this video, I'm just showing you 5-minute time frame combination, 15-minute to 5-minute time frame, where you will get very simple and easy to trade setup here. because in a 1 minute time frame, in a 50-minute time frame to 1 minute time frame, when you will switch, then you will see very noisy price action. That's why most of the time what happen, you are not able to take decision, and people just enter and hit a stop loss or maybe break even, and then market hit our take profit and sometimes stop loss. To avoid these type of thing, you can switch little bit higher time frame. You can use 5 minute time frame for better confirmation. So this is our 15-minute time frame structure basis, and you can switch in a 5 minute time frame in a lower time frame. And this is applicable in a structure basis, not candle range theory. If you are thinking that we are using H4 as a higher time frame and you are using 1 minute time frame as a lower time frame, because those are using in a candle range theory, which is applicable only for candlestick, where a market create a very aggressive momentum to the upside and downside. That's why we are not able to take the another time frame. 1 minute time frame is a very enough. Even 2 minute time frame we can take maximum. So in this case, market taking out the investment, push downside, create a very strong momentum is here. And after taking out the investment, what happened here? Push downside, and this is exactly what happened here. This is our order flow, mitigate here. Once price broke it and push downside, and we can plan here for the sell at this point right here. This is a candlestick, confirm here and put the stop loss just above the high. And why we are taking entry at this point? Market taking out the investment. After taking out the investment, market what happening here? Taking out the investment, push downside, break the low, pullback mitigation, and we can sell. If there is no pullback mitigation here, we can still sell here because we just price close below it. When price close below it, we can directly sell here at this point right here. Where is the take profit and how we can set them? Firstly, the first target is here. We can set based on the previous swing high low. This one is our previous swing low is here. We can set the target, and in this case we can see here 2.87, almost 3R you will get a target right here. This is our entry, and this is our stop loss, and this is our target. We can set the previous swing high low as our main target is here. And let's see what happens next after this one and how we can deal in this case. Market take a pullback and again go higher, and finally market hit our take profit in a very aggressive way. And why this move happen here? Because we are following the higher time frame. Liquidity is taken out, mean the investment taken out, tap on the unmitigated order flow in a higher time frame, same thing following in a lower time frame, and market create a structure, and we can take direct entry here in this case. And one more entry is a possible here if you want to add multiple position in this case. So simply what we can do, one price to mitigate this one, we can take entry. Another possibility is here, market take a small pullback and go higher, and they can taken out the investment, and then we can plan for the downside. But problem is here, if you are thinking this one is a valid investment and valid entry criteria is here, so this one is not a valid. That's why we are not adding one more position is here. Market push downside, take a pullback, but this pullback is not able to broke this one. So this is not investment. This is a move something like this one. So we are not counting this as an investment. If same thing happen like this one and then go higher, so this move act like a valid investment. That's why this is not a valid ace here. So we are not taking entry here for the sell setup. Okay. So this is our first area when we are planning for the sell at this point right here. This is entry criteria, stop loss above it, and target the previous swing low, which one is here. So how we can set, this is a complete process that how you can take entry, stop loss, and take profit is here. And this is a very simple and very clean entry is here. Let me show you a few more examples is here. Again, switch in a 50-minute time frame to see exactly what happened next after this one. If market taken out this one, suddenly what are you looking here? We are again looking here for the sell after taking out the investment. In this case, we can see here where is the investment and when we can expect the next possible scenario is here. In this case, we can see one more investment is here. It means this is our higher time frame structure here. Market taking out the investment. Once price mitigate the investment, taking out the investment, then we can plan for the next sell setup is here. If anything happen between this one, this is called internal structure. Means we can buy for the short term till the taken out the investment. If there is any possibility is here, so we can take entry. But for the short term, not for the longer run. This is a not high probability setup here. So this is our previous swing high, and if market taken out this one, so we can plan here for the sell. Let's see what happened next. This one, break the brief structure. It means investment taken out. After taking out the investment, what are you looking here? Suddenly, as I told you starting, market should be break the in same higher time frame, break the recent low. So if market break it, as you can see here, market broke this low, and once market broke this low, we can switch here immediately in a 5-minute time frame. This is our 15-minute time frame structure. We can switch here in a 5-minute time frame to see exactly what happened next after this one. And once price mitigate this one, and you have to wait for it in a 5-minute time frame. In a same 5-minute time frame, if market taken out the investment, we can again plan for the sell. And let's see what happens next after this one. Price taken out this investment is here. This is our investment because this is our first pullback after big the structure here. Taken out this investment is here. Let me show you exactly. This is a pullback, push downside, taken out the investment. If market broke it, we can again plan here for the sell. If we are planning for sell, where is the target? Previous swing low is here. Let's see what happens next after this one and how we can take entry here for the sell setup. And let's see what happens next after this one. Market broke it, and once market broke it, we can directly sell here. When this is our first pullback is here. So once price close below it, and we can directly sell at this point right here. This is our entry criteria is here, and put the stop loss just above it. And where is the target? Target we can set the previous swing low, which one is here. And this is our entry, and this is our stop loss, and this is our target, and you will get 2.7 hour, approximately 3 RR. So this is our entry criteria and how you can take entry here. This is our complete process here. After taking out this one, again price push downside, again market taken out the investment, so we can take one more position, otherwise no, you have to wait for it. Price just pushing downside and downside at this point, market what happened? Immediately push downside and hit our take profit is here. So this is our complete process that how we can take entry. This is our very simple and very easy to trade, but this will be only simple when you are doing backtesting and practice on your chart, then you can identify them a real entry. So I hope you understand what I'm trying to explain here, and this is a very beneficial to you when you are marking the structure in a higher time frame and using lower time frame entry module. Simply you have to wait for it to take out the investment, wait for order flow mitigation, and then we can plan for the buy and sell using lower time frame. In a previously we are using the 1 minute time frame structure when we are using 15 minute as a higher time frame structure, but this time you need to use the 15 minute to 5 minute structure, because when you are using 15 minute to 1 minute time frame, you will see very aggressively very noisy price action, and price most of the time what happened, market hit our stop loss because market create a lot of liquidity in a 15 minute time frame to 1 minute time frame in a structure basis. So market create liquidity, hit our stop loss, and then market push higher and lower as per our plan, but market not hit our entry and take profit immediately. But while you are using 5 minute time frame, then all noise will be clear. So you have to focus on 15 minute time frame to 5 minute time frame using the structure formation, not the candle range theory. Then you have to use H4 as a higher time frame and 1 minute as a lower time frame, because in a one candlestick you need to use only one candle, 1 minute time frame, which is very enough to you for the buy and sell. You will get a very aggressive entry for the buy and sell. This is a complete process that how you can trade using 15 minute time frame to 5 minute time frame, using the order flow higher time frame to lower time frame. So thank you so much everyone to watching the entire video. I hope you enjoy it. If you are new, subscribe our YouTube channel and so on our free Telegram channel, link in description. Go and check out, and I will see you in the next video. Happy trading.